All right, good morning, trade pros. Welcome to our morning market update for Wednesday, January 17th, 2018. It's George Papsov, Trade Pro Academy. Today, we're going to talk about a number of things, including some earnings from Citigroup, earnings from Bank of America this morning, Goldman Sachs, cryptocurrency crashing, and also, we're going to round that out by a few Federal Reserve events that are going to be taking place today. So we got a pretty full update. So let's get started. This morning, first and foremost, yesterday we had some interesting earnings. Citigroup is up almost 0.5 point after topping their earnings estimates, and CSX is down 1% after hours on some disruptions to their turnaround plans that they had stated previously. In Asia here, markets in Japan are down 0.4%, Hong Kong's up 0.3%, China's up 0.2%, and India's up 0.9%. So a little bit of overall flat in Asian markets and no massive movers other than India's market. In Europe, London's down 0.2, Paris is down 0.1, and Frankfurt's down 0.3%. So you're seeing weakness here in the middle of the European equity session as we're moving towards their close at 11:30 a.m. Eastern. We'll see how that turns around. But so far, weak in Europe. S&P 500 is up 0.4% overnight. Dow's up 0.5 percentage point. Nasdaq's up 0.4%. And last night we were doing our evening trading workshop, and I was saying this entry on Nasdaq may very well be the low of the overnight session, and we got it on the low. So if you would have held that one trade as we had discussed last night with just one single contract, that was at $800 profit potential with just $400 worth of margin. So that was a really good opportunity. We kind of set that up in the evening trading session, but then we rolled with it and said, hey, if you hold it, there could be some upside potential. So we caught on to that pattern very quickly. And that was a great opportunity. Crude oil today is down 0.4%. So as we mentioned, as of yesterday, we are now selling rallies of crude. We're sellers on momentum to the upside and weak volume, and also sellers of gold. So as gold rallies on weak volume, we want to start to sell it as well. So we're selling rallies in crude and gold, and I think equities might soften up a little bit also, and we could see a little bit more downside. I think this is just starting. Yesterday we had the real first wave of a down market, and many traders were emailing me saying, what is this all about? What is going on in the market? And nothing's going on. That's usual downside selling, the likes of which most people who've traded in the past 6-7 years don't remember. And I can tell you this, when markets move up quickly, they move up quickly slowly, so they give you time to act. When they move down, they don't give you time to act. They just stick you with massive losses until they rip your heart out, and then you get out, and that's the low. So yesterday, it was just a little bit of indication of what the other side of a market feels like. There's no news for it in particular. We were right on that trend. We were shorting yesterday in the S&P. We did great. Let's talk about the topic of the day. Bitcoin down another 12%, now down over 50% from the top. Not 50 yet, but very close. To 99.58 was the low of the move. And should you buy right now? Well, the answer to that from a technical perspective is we're getting very close to a low risk entry point. There's a lot of money waiting below. Our support levels are 8,900, so 8,920 or so, up to 9,600. That's a key support for Bitcoin in particular. But there's a lot of pressure that cryptocurrencies will be regulated from China and South Korea as well. And that's putting a little bit of pressure on them. Some of the early traders who got in when it was a little bit more risky to get in started to sell out of it to take profit. And the people who bought it at the very top are left holding the bag, like always in any market. Usually when you buy it, when it starts to feel like, oh my goodness, this is an opportunity I can't pass up, and your grandmother told you about it, listening to it on the news about cryptos, and you go out and buy it, you're usually buying the top. You have to know that. By the time you get excited, there's a good chance that already the big money is in, unless you know about it from a long time ago. So you got to be cautious with these sorts of things. You never want to be left to holding a top in the perspective of will it come back, will it not? You shouldn't have to worry about that. You should never be in that position. If you trade smart and pick good levels, you won't be in that position. So 8,900 to 95 to 96 on the top end is where the support's at. I know there's a lot of money waiting for it down there. That's our next support, our TradePro support for Bitcoin. So keep an eye out on it. I'll tell you this much. It's not cheaper. A lot of people are saying Bitcoin's now cheaper, but it's cheaper in comparison to what it was in the past. But price does not dictate value, and price is what you pay, value is what you get. So the question is, Was it overvalued at 20,000, and is it fairly valued now? So then in that case, it's not cheaper. So don't look at things as being a discount to their top, because if that top never made sense with, that's an unfair high anyways. So just be a little bit diligent about this. Be cautious. You're going to stick your neck out in this crypto market. It's very volatile. If you're swing trading it, you should have 100K. On all these leverage platforms, leverage helps and leverage kills at the same time. And I know which one of the two is nastier for sure. All right, let's move forward. This morning we have industrial production at 9:15. We have the NAHB housing market index. 2 p.m. we have the Fed's beige book. Not many big, massive announcements. The U.S. Senate Banking Committee today is going to confirm Jerome Powell as Fed chair. So it's very likely he's going to get the confirmation to nominate him. And also Randall Quarles to a 14-year term as governor of the Federal Reserve Board. Cleveland Fed President Loretta Mester is going to speak on the central bank's best path forward during a lecture at Rutgers University. Chicago and Dallas Fed Presidents Charles Evans and Robert Kaplan will participate in a moderated discussion in Palm Beach, Florida. So there's a lot of Fed speakers. Keep your eyes and ears. You can't keep your eyes on the news, I guess you can if you read. Keep your ears to the squawk and pay attention to what's going on today. There could be some volatility on these speeches from the Federal Reserve board members. All right, from ECB, now let's travel over to Europe. The Eurozone inflation fell. That's a bit of a tongue twister. Eurozone inflation fell further, rising at an annual pace of just 1.4%, down from 1.5% the previous month. And the euro dropped almost half a percentage point on that news. So inflation didn't really do well, and it's down. And now the European Central Bank is in a situation where they're going to start pulling stimulus out of the market, and we still can't get inflation to agree. After all this money these central banks have circulated into the economy, we still can't get inflation. That's a bad sign. That means the money is not circulating. It's blocked. I'll tell you where it's blocked, in the bank vaults. All right, let's talk about two earnings reports from Goldman Sachs and Bank of America, and let's call it a day. We'll cover Goldman Sachs in a little bit more detail because it's more important. It's a bigger bank. They do a lot of operations in the market. All right, they reported Q4 earnings per share of $5.68 versus $4.90 on $7.83 billion revenue versus $7.63. They missed the revenue number, and their reported Q4 earnings per share include a minus 5.51 or minus $5 billion tax charge. So they're setting aside provisions or setting aside money to pay for tax adjustments at the beginning. This is Goldman Sachs, and that took a hit. It pretty much wiped out their entire income statement, and they're at a loss. But there's a 5.51 charge based on a GAAP measure of earnings. Actually, GAAP earnings per share measure is minus $5.51, a massive miss on a quarterly basis. A lot of that is a provision for the tax overhaul, so they've set aside that money. Okay, so that was expected. Investors expected that. Analysts expected that as well. Here's the troubling part. It's better than the 7.61 billion that was expected. So analysts set a low hurdle for Goldman Sachs. Said expect 7.61 billion of revenue. All right, so they jumped and they got 7.83. So 95% of investors will say, wow, we beat expectations. The 5% that are smart will say, well, what are expectations based on? And let's get a relative mark. What was the previous release? Well, get this. That's the lowest print since the first quarter of 2016 for Goldman Sachs. So despite the fact that the hurdle was low and they beat it, the actual number is the lowest reading since January of 2016. So it's not good for Goldman Sachs. They whiffed on that report, and a 50% plunge in their FIC revenue, which is fixed income, commodities, and currencies. All right, that's what FIC stands for. That's basically a bank's trading division and department. They reported with just 1.28 billion. Actually, expectations 1.28. The print came out at 1 billion, and the previous year, 1 year ago, this period, so 1 year prior comparison, was 2 billion. So a big drop in market-tied revenues from Goldman Sachs. So if you're not making money trading, don't worry, Goldman Sachs isn't either. I mean, you should worry. You're not Goldman Sachs. You're not trading the size they are. We've been profitable. 2017 was a great year for us. 2018, we're off to a bang. Big start. Bank of America, Q4 adjusted earnings are 0.47 versus a 0.44. So Bank of America beats on the earnings per share and they beat on the revenue, 21.4 versus 21.3. Return on assets was up. Let's see, I'm just going through a statement for the first time now, actually. Net of interest expenses, total revenue is up, so that's good. Global markets revenue down 2%. So their global markets division put out 3.5 billion, down 2 percentage point. And their FIC revenue is down 13%. Their fixed income department is down 13% as well. So they're also having lower trading revenues. Equities are flat. Fixed income is the worst. Provisions for credit losses. No, forget it. That's all I'm going to do. Bye, guys. Have a good day. I hope you guys have enjoyed this morning market update. Remember, be patient. Wait for cryptos to hit some of those support levels. Wait for Bitcoin to hit that support level we talked about, 8,900, 9,500. There's some money trying it down there. And when it touches that level, don't just stick your neck out and buy it. Wait for confirmation. And if you don't know how to set up a trade plan, if you don't have one, and if you'd like to learn, that's what we are here for. You could sign up for a TRADEPRO Academy for a swing trader package. You get access to daily updates and weekly trade ideas, including analysis on cryptocurrencies. And if you want to day trade, you could join our Day Trader Pro package, and you can come in and join us in the live trading room every morning, 9 a.m. to 11 a.m. Eastern. And we trade as a group, as a team. If you want to get both of them, get the elite package, and includes a coaching session as well on a monthly basis. You guys take care. Have yourselves a great day. Happy you tuned in. I'll see you tomorrow morning at 9 a.m. All the best, and good luck. Good trading out there. Manage your risk and trade like a trade pro. And be cautious. Today, yesterday I had a sixth sense that the market was going to get smashed when we're trading at 28.07. Pretty much shorted right at that top. I just had a sixth sense. Something, it felt off. Today, I feel like that selling can continue. So be cautious out there. All right, guys, take care. All the best. Have a great day. Trade pros, let's open up the room, set some levels, and make some money. Let me just turn off the YouTube live stream, and we can get into it because this is top secret stuff, right?